afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we are continuing to work with the Fractal along with Minmax, and of course, we are also utilizing the ATR and the EMA indicators. This is a technical description here. By now, I hope you are well familiar with the functionalities of all these four indicators, which we are using to build a profitable algorithm. And of course, until we build it fully and test it, till we can't really make a claim. Before we get started, there is a standard disclaimer here. I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend you do extensive trial runs and also allow it to run on the demo account for good enough time to get a clear idea of the efficacy of the said algorithms. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we get started for our day. The setup is fairly simple. We are trying to look for a sell trade when the EMA crossover is in the bearish zone, and when the EMA crossover is in the bullish zone, we will be trying to go for a buy trade. Now, there are two factors here to consider while making use of this EMA crossover. First thing is we want the trading to happen during the initial hours of the trend change or after due correction and consolidation. We don't want to get involved at every point in time. So for that, we will need these additional conditions. And what we have done, we will want the whenever we are looking for a sell trade, the 30 hours maximum value should be above the 10 EMA. At the same time, whenever the trend change will happen, a similar kind of scenario will play out. The crossover is in the bearish zone only, but the price action has now moved to the upper side, and here as you can see the maxima is fairly above 20 EMA, and eventually even this crossover is going to turn into a bullish pattern. So to avoid such kind of scenarios when the crossover is still bearish but now the price action has shifted with a bullish undertone, we will bring in one additional condition that the maximum should be less than this 20 EMA. That will be the condition for the sell trade, and for a buy trade we will want the minimum should be above this 20 EMA condition. And whenever there will be too much of volatility, and if the price action is far away from this desired zone, then no trading will happen. And here maybe on this day our algorithm would have looked for a sell trade, but very next day when the price momentum picked up, that day onwards it would have stopped looking for a sell trade, and we wouldn't really be suffering too much losses. Of course, we will be making some losses. Some of the trades will go in losses, some of the trades will go in profit, but overall we should be making profit. That's the whole objective of building the algorithm, which is fairly sustainable. To make sure there has been decent correction, we will bring in this condition that the maxima should be higher than the maxima 29 hours back. And then to make sure that due consolidation has been there, we will want the maximum value to be equal to the maxima 6 hours back, and also the fractal maximum should be less than the 30 hours maxima. That will make sure that consolidation has happened, and now the price momentum is shifting to the downside, and then only we will be getting involved. And for the buy trade, now we need to go back in time. The story would be opposite. We will need the the minimum to be equal to the minimum value 6 hours back. That will mean that consolidation has been there. The fractal minimum should be greater than the minimum of 30 hours, and also this minimum value should be less than the minimum value 29 hours back. That will mean consolidation and correction, both of those conditions have been fulfilled. So we bring in those conditions for our optimizing purpose. So now we have built half of the buy side, and we will progress with our rest of the setup. And for a entry point, what we are trying to achieve is we will want the sell trade to happen as close to the current fractal's maximum value as possible. So what we will do, we will wait for fair amount of correction, and here let me check if the conditions will be fulfilled. This is 17 GMT, so the yes, this maximum value is equal to the maximum value 6 hours back, and when this will be formed, we will need to wait for 3 hours, as our fractal is using the formation of 3 on each side. So after this candle close, that is 3 GMT, we will be in a position to go for a sell trade, but we will want the order to be placed closer to the maximum value, and that might be valid for 1 or 2 hours. So we will be placing the order, but it won't really be fulfilled, and then suppose if the value is within this 5% of the ATR range, then we will go for a market open. Suppose if the value is beyond that range, if it is lower than the 5% of ATR from this maximum, then we will be placing a pending order, which will be from 5% of this ATR, which we will determine using the calculation expression, and so that will be our setup. And I think here maybe around this time our requirement might be fulfilled, but then the current maximum value should be greater than the maximum value 29 hours back. That means we need to go back in time, and that might not be the case here. So it is, the value is 107.938, and here, so here also no trading will happen, as we need, anyway, this is 23rd of April, 0 GMT, and we, yes, trading will happen, and after this condition, our algorithm would be placing the order somewhere here, and as I can see, we will be making fairly decent amount of money in this trade most probably, but only when our algorithm will be ready and we will be able to test it in similar kind of formations. Here also this maximum formation is here, and the requirement that the maxima should be higher than the 29 hours back is not going to be fulfilled, and also the requirement that the maximum value should be above 10 EMA is also not fulfilled here, so no trading will happen here as well. So now let us go back to the Visual J Forex platform of the Ducoscopy, and there we will see what we have done so far. We have done instrument subscription. The instrument is 0 USD. Then we got this position amount defined at 0. We got the fractal. We got the min-max indicators, the 4 blocks. Shift 0 for the current value. Shift 6 for the value 6 hours back. And then we got the ATR defined on the daily time frame. We got the min-max again with shift 29 to get the value 29 hours back. We did this calculation for defining the 0.5 percentage range of the ATR, so the user's variable. Yes, 0.05 is the factor with which we are multiplying, then the EMA for the crossover purpose, and the historical candle to make sure that the last candle has closed in red, green or red, depending on which kind of trade we are taking. For a buy trade, it should have closed with gain. For a sell trade, it should have closed with losses. So now we were building the buy side, and we have done these conditions. The EMA crossover should be in the bullish zone. The minimum value should be less than the 10 EMA, and then the minimum current minimum should be less than the minimum value 29 hours back, and the minimum value, current minimum value, should be equal to the minimum value 6 hours back. And then we got this candle close condition defined where the closing value should be greater than the opening value. So most of the conditions have been defined, and only one condition will need to be added, that is this is the minimum 60, the fractal value, and it should be greater than the current minimum value of 30 hours. So this is need to be connected to one more if block, and then we will be in a position to go for the pending open or the market open, depending on where the last tick price is. The minimum value should be greater than minimum 19, and we want the current minima to be greater than the EMA 20. So we take the bid low price, here is the minimum 19, and we take EMA 20's value, and EMA 20 is EMA 30. Okay, it should be greater. We need another if block, and that would be connected here, and minimum value should be greater than the EMA 30. So we have defined this condition, and now we need to look at the closing level of the last candle. If it has closed within the 5% of the daily ATR from the fractal minimum, then we can go in for a market open order for a buy trade. If it has closed higher than the 5% of the ATR from the current fractal's minimum value, then we will be placing a pending open order, which will be at exactly the 5% of the ATR value from the minimum. So we now look at the difference between the candle closing level and the minimum value. So we will need to do the calculation here. We will need to see candle 31's close, which has shift one value, candle 31, that is last hour's candle hourly, needs to be, see here I will explain to you on a buy setup. Let us go when the crossover was in the bullish zone. So here suppose our rest of the conditions are getting fulfilled, let us assume for a moment. Then if we are going for a buy trade, we want the candle to have closed with gains. That means the candle's closing price is greater than its opening price. At the same time, it should be, if there are two conditions here, if it has closed, if this closing price and this minimum value, the difference between them, which we will be calculating using the calculation expression, should be greater than 5% of the daily ATR for a pending open. Suppose if the difference is less than the 5% of the daily ATR, then we will be straight away, if it is fairly close to this minimum value, then straight away we will be looking for a buy opportunity. So we will be going for a market open, and we don't need to place a pending order for that. So in today's session, in today's setup, we will be utilizing both the formations, and that's why we are doing this calculation to determine the difference between the closing and the minimum value. So we take the candle 31's close can auto created variable. We take candle 31's close and we deduct the fractals minimum and the fractals minimum value is here, minimum 16. We do a1 minus a2, and here we make it like fractal difference fd. Okay, and this fractal difference should be greater than the 5% of the daily ATR. So we take this and we compare it to the calculation which we have done earlier. Candle close and minimum 16, and the earlier calculation is AP. Now we have two ways to deal with this situation. As I said while explaining on the chart, we will be going in for two different setups here: open at market and pending open. So here what we do, both these trades are going to be for the buy. One is current market open and one will be buy limit. And here, if the fractal difference is less than the 5% of the ATR range defined at the daily times, and then we go for a market open, and if it is greater, then we go for a pending open. Now what we will need to do is we have to calculate now the take profit. The stop loss slippage will be at 2 pips. For Euro USD, 2 pips slippage is fine. The position amount can be set as per your account equity. Let us, for example, keep it at 0.1 million. The price will need to do calculation, and the trade amount can be, we will keep it equal 0.1 million. Slippage will be 2 pips, and here for this thing, for order validity time, for take profit and for stop loss, we will need to do calculation, and we are going for a stop loss and the target price ratio of 1:2, and I think that 15% of the daily ATR is good enough for the stop loss, and we will keep 30% of the daily ATR as our target price. So that will be the setup. So here we keep these blocks there only, as we will need to do the calculations and then assign those values to the result of the calculation with type change for the data output as well. We will need the output in the integer, and most of the calculations we have done so far are in the double format. So now we take calculation expression, we need to do three calculations, one for the stop loss, one for the target price, and one for the order validity. So we do all three calculations with the help of the daily ATR, and daily ATR is so here comes the ATR. We need to create, we don't really need ATR value in all the three blocks. One for the order validity, will not need ATR, only for the stop loss and the target. So I kind of overlooked that fact. We need to create fresh variable here, create new variable, which will be the decimal point adjustment we have to do. And since EURUSD has 4 decimal points, to cancel those and bring it to the integer format to make the pips in integer, we need to multiply it with the 10 raised to power 4, and its name will be the pips converter, and we multiply, the value is 10,000, 10 raised to the power 4. Okay, and we bring it here. Now we create additional variable, create new variable, and it will be stop loss pips 0.15. So we save this SLP, and here we make it TPP 0.30. Target price A1 into A2 into A3. Same thing here, A1 into A2 into A3. So this is the stop loss and this is the target price calculation which we have done. Now we will need to do the order validity thing, and then our buy side will be almost finished. Then tomorrow we will be free to start working on the sell side. So here comes the calculation involved. Now we need to remove these and create fresh variable, as default values we are not really using. Stop loss and district profit, and we will create a fresh variable named SL only, SL. Okay, and we put this calculation, result of the calculation, and now we have done this type conversion. Okay, save, and that value would be the result of this calculation. Same thing which we need to use for the open at market order as well. So here, so far so good. We need to do the price calculation for the open price. We haven't done that just yet, so we make this here. Now two calculations are remaining. One is for the open price for the pending open, and other is for the order validity time. We line up this here. Okay, order validity time, I think 2 hours should be good enough. So suppose after 3 hours we place a order for validity of 2 hours. Somewhere here the order will get executed, and I don't really know if it will hit in loss or not. It might hit in loss, or it might survive, and then it will if it is loss, poor luck. If it survives, then maybe somewhere here it might hit or might not hit the target. Even trailing setup can be made. In next few sessions we will do a trailing setup as well, but for today's session we are not doing trailing setup. Now we have one calculation expression block here, which which we can still utilize. And first we do the entry point, and for that to define the entry point we get the minimum of the fractal, and then we add 5% of the daily ATR, and that would be our entry point. So here we take the minimum value. I will explain to you on the chart. So suppose rest of the conditions are fulfilled here. Then from the minimum we will be adding the 5% of the ATR range, the daily ATR, and that would be our open price, which will be valid for the next 2 hours. So that's what the setup is. So we take minimum 16 and we add 5% of the ATR, that is AP, and we get this A1 plus A2, and the result of the calculation is BE, and we save it. Oh, variable already exists. By execution price. Okay. So now we got this by execution price as well. So we put it here. Now good till time, order validity time is yet to be defined. So we need to do one more calculation, and once we define the order validity time, and there is one more condition for the market open as well. We will want it to be precise, some single point of reference for the order to execute, and I think last hour's candle close can be a good idea. So we can take two more historical candles of say 10 seconds each, and whenever the price starts to rise above the last hour's candle closing, then the pending open order, the market open order can execute the trade, can trigger the trade. So I think that should be a good idea to bring the risk down. Now for order validity time we need to do the last tick time, and then we need to add 3.6 million ticks. That's for 1 hour, and then if we multiply it by 2, we get the order validity of 2 hours. Last tick time, and we create a new variable. We name it tick time tt, and its value would be 3.6 million. So count the zeros well. Yes, 3.6 million, and we bring it here. We create a fresh variable ov order validity, and its value would be 2, and we take this here. And now what we need to do is a 1 plus a 2 into a 3, and the result of the calculation needs to be in the long format. So we take the variable created here, we name it OVT, we save it, and we take it to the result of the calculation. So here we have done this. And now, as I see, time is also running out, so we will need to be a bit quick here. We bring two historical candles, mathematical components, and we take info, get historical candles. Oh. And that is the and here we join it. Here, suppose if we later on, if we suppose need to do further calculation while doing the cell side, we will again disconnect the flow and add whatever blocks are required. Now we need to compare the candle 50 and candle 51's closing levels to the candle 31's closing level, and we make it 10 seconds each. One will be the shift 1, another will be the shift 2. Shift 1, shift 2, and then we look at the closing prices for both these candles. This will be the trigger point actually. If it is well within the defined range, then the market open will happen. If it is outside of the defined range, that is it is higher than the 5% of the daily ATR from the minimum value of the fractal, then the pending order open order will be placed. So it is common trigger for both the open conditions. Now we need to take the candle 31's closing level into account, and candle 31's close needs to be compared to the candle 51's and candle 50's closing levels. it should be rising. That means candle 50's closing level should be higher than the candle 31's, and candle 51's closing level should be less than the candle 31's close. Means the price is starting to move higher, and we define it like this: candle 50's close should be greater, whereas candle 51's closing should be less. So we take this and here we get this value. Now we need to adjust this actually. So here we do the change. Candle 51 has closed higher, and we need to make sure that minimum 19 is greater than EMA 30. So this condition needs to be disconnected and joined here, and then the candle 51 should have closed lower than the last hourly candles. That would be the trigger point, and then we go for a fresh position depending on where the last hour's candle has closed exactly. If it is within the defined range, then the market open will happen. If it is far away from the, not far away, but at least 5% of the ATR away from the minimum value, then the new order would be placed at the 5% of the ATR value. So here we need both kind of open orders depending on the situation. So that's it from my side for today's session. We have completed this buy side setup. In tomorrow's session we will try to finish the sell side setup. So thank you all for joining in for today's session. I hope you have understood the concept which we are working on. So I will be grateful if you try it on your own and see how it works, and also do some testing before we will be back for building the sales site tomorrow. Have an excellent day ahead. See you tomorrow. Goodbye.